All right, students, welcome back. These are your lectures for the topic of corporations and financial markets. All right, so for the first class, we're going to cover what we call the topic of um, corporation, incorporated company, how to register company, types of companies, and a company and separate legal entity. All right, what is a corporation or company? A company means that a company registered under Part 2 of the Companies Act, 1997 in PNG. And basically, this is a corporate entity that's registered under the Companies Act. All right, a company is a legal entity in its own right, separate from its shareholders and continues in existence until it is removed from the register. So Section 16 of the Companies Act. So Section 16, it's a very important doctrine in law because it gives company a separate legal entity. So a company is a person in law. It can own property, it can sue and be sued under its name. So for instance, if Glenn works as the if so let's say if not Glenn, sorry, Raymond Chow, the Chow from Lay Biscuit Company. What happens is that if someone wants to bring an action or take the company to court, they won't take Raymond Chow to court, they'll take the company Lay Biscuit Company Limited, because it's a company, it's a separate legal person and can be sued and sue on its own name. All right, so basically the idea of the separate legal entity means that another Section 16 of the Companies Act, the company is a separate legal entity and its shareholders has the capacity to sue and be sued. And this all doctrine originated from the case of Salmon v. Salmon. So that's what we mean when we say company is a separate legal entity. All right, types of companies. So in Papua New Guinea, apart from incorporated lending groups, which is a vehicle for customary landowners to commercialize their customary land into a state title or anything like that, you would see that you have almost five types of companies in PNG. The first one is a sole trader. The second one is a partnership. Third one is a joint venture. Fourth one is a trust. And fifth one is a company itself. All right, sole trader. So a sole trader is an individual who carries on business on his or her own behalf, and a sole trader can carry on business either under his or her own name or under an adopted business name. If a business name is adopted, the name must be registered under the Business Names Act. All right, the principal advantage of carrying out a business as a sole trader are it is easy for you to wind up or sell as a business arm. So if you're a sole trader running a tiger box there, if you want to leave, you can either sell the tiger box or you can either sell the goods plus the tiger box for someone else to come and rent. So it's easy to start and easy to wind up. But also the costs are small. Basically, you will note that the businesses are generally less and it's sort of small in terms of its costs. Right, other than preparing an initial tax return, they are not reporting a disclosure requirements. So big companies like Credit Corp, big companies like Bankside Pacific, they have a lot of reporting and disclosure requirements that they are required under law. Whereas small companies, you don't have these things associated with the company. But there may also be income tax advantage in operating this type of company. All right, so that's what we know as the sole traders. Sole traders are like little tagger boxes. You just go get a business name. So to run a business tagger box in PNG, you go and get a business name from IPA. Then you go and get your trading license from the regulator. So in Port Moresby, it's the National Capital District Commission. And then if you go to sell liquor as well, you get the liquor license. And then you open your bank accounts and you're good to go. All right, a partnership exists when two or more entities or persons agree to carry on business with a common view to deriving profit jointly. Right, a partnership is not a separate legal entity, and liability of partners for the obligation of the partnership is joint and unlimited. So when you're a partner, it's joint liability and it's unlimited. And then often the rights partners and sort of the agreements regulated by Partnership Act. Basically, it's limited to 20 partners, and then you would see that the interest of partner is not free and transferable, as the consent of the parties is necessary before partnership can be transferred. So when you enter into a partnership, you can just not transfer your partnership to another person. You have to get consent from everybody else. All right, what are the principal advantages of a partnership? Basically, the partnership arrangements need to not be committed in writing, so you just can make an oral partnership agreement. The degree of control among the partners can be agreed, and management may be vested in particular partner committee of partners. And then the partnership losses can be offset against income of individual partners for income tax purposes. And then uh, what happens in terms of profits, partnership profits are only taxed once as income of the individual partner, you tax it once. Whereas for a company, it's the company profit of a company are taxed once as company income and against a shareholder income. So once in a partnership is you only get taxed once as the partnership profits. So but in a company, the profit of the company are taxed, and then once you pay dividends to your shareholders, the shareholders' income is taxed as well. So it's advisable to for companies like that. For that's why I tell you people to get the partnership. So some big companies are like Kuna Tabari and Kirui KTK accountant partners, or Black Dozen Waldron big law firm partners, or Price Waterhouse Coopers accounting firm partners. All these firm and partnerships. Or a joint venture. A joint venture is a contractual agreement between two or more entities to carry the business in common other than partners. It can be incorporated joint venture where you registered and incorporate, or it can be unincorporated joint venture. So this type of arrangement is it's very very sort of appealing to businesses in the mining and petroleum sector. In the next slides, we'll cover this type of businesses and why it's advisable in the mining and petroleum sector.